What's happening, everyone? So as many of you know, I am transitioning from the employee world into the self-employed world. And something I've just never been so great at was managing taxes, especially going from this one shift here. So part of my philosophy has always been to surround myself with the best people. And today I have Howard Goodman. He was featured on episode number 122 of the podcast. I'll leave a link below so you can check that episode out. So Howard, if you would, give me some tips here, give me some insights into what are the biggest things that I need to be paying attention to in terms of my taxes moving from employee to self-employed.
Right, of course. So what a lot of people don't realize, first of all, is that you actually pay some more taxes when you do go out on your own. So for example, when you're a W-2 employee somewhere, most of you have seen your federal withholding for your income taxes, and you also see a reduction in your paycheck for Social Security and Medicare. Now, those two things combine to be 7.65% of your gross salary. So what people don't realize is that your employer is actually paying that same amount, that same 7.65% to the government on top of that. Well, what happens when you're self-employed or you start your own business is the government wants to collect their income tax, of course, but then they also collect from you that Social Security and Medicare, both the employee side and the employer side. So combined, that's 15.3%. So really, when you get all those 1099s and all those checks for your business, and it's wonderful, let's throw out an amount, $10,000. First of all, you have to put 15.3% aside just to pay the self-employment tax, and then you have the income tax on top of that. So a lot of times people will come to me and they'll say, well, I made $50,000 as an employee, and now the same company wants to hire me as an independent person for $50,000. I say, well, that sounds great and that sounds fair, but in reality, as your own person, as your own manager, you have to pay more taxes. You have to pay twice that Social Security and Medicare tax, and now your ex-employer doesn't have to pay that anymore. They don't have to pay their share. So their expenses go down and your expenses go up. So that's just one thing to be concerned about when you do have your own business. Make sure you take into account that you will be paying more taxes than when you're just an employee.
Now, as far as setting your own income tax away, that's in addition to that, right?
That's right.
How do you sort of begin to calculate that?
Exactly, right. So, of course, again, as an employee, your employer is taking out federal withholding tax as well as the Social Security and Medicare. But when you have your own income, nobody's taking any money out of that check. Your clients are just sending you money and you say, that's great, I have all this money. But what you really have to do is roughly every quarter, the schedule is not exactly every 3 months, but roughly every quarter you need to make an estimated tax payment to the IRS, where you say, okay, here's my net income, so that's your revenue, the money you take in, less your business expenses, that's your net income, and then you have to figure, well, I need to pay income tax on that, and I need to pay the self-employment tax of 15.3%. You figure out what that is based on your history, based on the current tax tables. You say, well, 15.3%, and I expect to pay 10 or 15%, income tax. That's 25, 30%. So you need to take that 25 to 30% of what you've got in the bank from all those checks and put it aside, and every quarter actually pay the government that money. That way they get their money the same way your ex-employer was taking money out of your paycheck. Usually more often, once a month, twice a month, depending on how you got paid.
So there you have it. That is definitely a new habit that I'm going to have to create. And so instead of it automatically being deducted from my paychecks, just receiving the net, I have to do these things manually myself. So
right. So just like earning money on your own, now you have to pay taxes on your own. Yeah. It's all on you as a business employer, an employee of yourself.
It is a brave new world. Howard, thank you very much for sharing this information with us. So there you have it, a quick lesson on taxes from employee to self-employed. We'll see you in the next video.